JJ the CPA here. Year-end tax planning, we're going to talk about pushing and pulling income. We're not talking about putting the check in the drawer. We're not talking about taking cash and setting it aside and waiting to deposit it into the bank. So let's first talk about the ways that you have to recognize income. So if you receive a check from somebody and you've earned that fee, starting with that, that is income to you regardless if you deposit it into the bank. If you're on the accrual, which most of you, if you're a small business, are not on the accrual method, the accrual method is worse. If you've earned it and sent the invoice to the client, that's when you recognize it as income. That's not a favorable situation because regardless of when you get paid, you're picking it up as income when you've earned it and you've invoiced the client. So when we're looking at cash basis and you're looking at, well, what is a way that I could help protect or control how much income I'm having to recognize as we get to year end so that you can better predict what does year end look like, you could start with delaying invoicing your client. If you're a doctor, you could delay invoicing the insurance companies. Let's be clear on this. I'm not talking about delaying and invoicing somebody after the first of the year. What I'm talking about, let's say on an insurance company with a doctor group, most of the time when you submit that claim to the insurance company, you're going to be in a situation where it's probably not paid immediately. There might be a lag. Sometimes it could be 6 weeks, it could be 4 weeks, it could be 2, but your staff, they're going to know what that lag is going to be, and they'll be able to help time when you bill that insurance and when they collect it. So if you're in a situation where you have patients, you know that they need to meet a deductible, you know that they have certain limitations for the year, you've billed it before year end. If you're in another service industry and you're sending out an invoice, you know you can control that because you know your clients and how quickly they're going to pay. If you're in any other kind of industry, say manufacturing or you're selling goods, when you invoice that client, it depends on when you're requiring payment. So you could be in a circumstance where if you're requiring payment immediately, say you're a retail shop, so you're not going to be able to really control how that you're able to collect that income, because if they come in, they're going to pay you, then you have to collect it. But let's say you're in manufacturing or something where you're selling a tangible good and you're in a situation where you require immediate payment. Well, then maybe you deliver that good after the first of the year. I know what you're going to say. Well, now I have to consider that to be inventory. No, you don't, because inventory are goods that you're collecting to make the product. So if you're in a situation and you're looking to control your income, a lot of different ways to do it. Again, not talking about doing anything illegal or anything in an aggressive way that's going to get you in trouble. I'm talking about controlling and thinking outside the box, all of the parameters that go in to how you can control when you have to recognize that income. You as a business owner right now are probably thinking, but I need the cash as soon as I can get it because I got payroll, I got to pay rent, I have all these other things that I need to do. And you're right. So some of the clients, we might just be getting into the last week of the year where they're doing some kind of limitation. But if you're a company and then you're grossing, $50,000 a month, well, that's $12,500 a week that you potentially could be collecting. So if you're in a situation for that week, you could maybe just push $12,500. If it sounds like too much work, that's okay. But keep in mind that you are still able to control when you recognize that income. And then why is that important to know? If you're in a situation for year-end tax planning, you do need to know, well, how much am I going to collect before year-end? Because that helps determine how much tax planning do you need to do for year-end to either offset that or have expenses that exceed what you're going to do near year-end. Because what we're trying to accomplish here is what? We're trying to reduce down what it is that you would have to pay come April 15th. Probably what you're thinking is, well, JJ, if I just push income to next year, aren't I having to recognize it next year? And so haven't I just kicked the can? Yes. But most of the time with small business owners, you think, well, I'll kick the can all day long because the less I have to pay for this year, meaning the less I have to write a check for in April or for my fourth quarter, the better off I am because then I have more money for payroll or for myself or to extinguish debt. So most of the time, especially in an environment where your tax rates are going to be experienced the same in this year or next year, it really wouldn't matter if you're kicking it to next year. Of course, what you'd want to look at is, well, do I have a huge year and a down year? So maybe it would make sense if I can find a way to push income into the next year. It would be better because maybe it can be taxed at a lower rate. Let's say it's the opposite. Let's say that you're looking at, well, I'm going to have some huge collections I know in first quarter, so maybe I should do what I can to try and collect as much income as I can this year. So you might bill early. If you're cash basis, you might ask for a prepayment. You might ask for somebody to pay you a fee before necessarily you've earned all of it, or do a progress invoice or a progress bill, so that you're in a situation where you're now pulling income into the current year because you are in a lower year. Let's say that you're buying up a bunch of assets and you really don't have a choice. You had to buy them earlier this year, either second or third quarter. So you have huge deductions into this year. So maybe your gross is going to be the same in both years, but if you have huge deductions because of big capital outlay in the current year, well, that might be a year that you're in a lower tax rate, so why not pull some income into the current year? So again, what we're talking about here is finding a way to control it. So you can control it the other way. If you're a doctor's office, you can claim immediately upon that patient coming in to the insurance company. You'd be calling the insurance company to say, get me my check. If you are dealing with clients, to say, hey, listen, wouldn't you want a tax deduction before year end, so get me paid? Wouldn't you rather go to a client to say, hey, listen, you're going to be buying this equipment, why don't you get it bought before year end, so that you're in a situation where your client, is getting that deduction. So if you're selling a good that they potentially can deduct, now they're getting the deduction in that year, you're pulling the income into the current year. That's why you want to visit with us. That's why you want to visit with your CPA. That's why you want to look at, where do my financials stand? What does my year look like? You don't have to just sit there and go, well, gosh, I don't know what to do. It should be in your head as a small business owner, knowing, I feel like this year it's been a really good year. I don't know if next year is going to be the same. So if you're an attorney and you have legal fees that are coming in on contingent cases, and you go, well, gosh, I had a banner year, I got a big fee in the summer. In the horizon, I don't know if I'm going to have that big a fee next year. Or it could be the opposite. You have a huge case in hand, but it's been delayed, or you're waiting for it to go to appeal or whatever, and you think it's going to be collected next year. You know, if you're in a situation where you've got financials, and even if they're through third quarter, you have an idea of what the year is going to look like, and you're now in the situation where you're just looking at what's going to happen between now and the end of this year. So don't get yourself caught up into knowing the penny on where you're going to stand. We're talking about kind of a larger picture to know, should you push or pull income into this year? And if you're in doubt, push it to next year, from the standpoint of, if you're now looking at the highest tax brackets in either year, why wouldn't you push it? So if you're in a situation where you can control your income, consider doing it. All right, hey, thanks for tuning in. Listen to the rest of the series on year-end tax planning. You don't want to miss out. And then don't you ever forget, you've never met a CPA quite like me. Don't you ever forget, you've never met a CPA quite like me.